Hello and welcome to this June 10th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Okay, before we get started today, I want to just thank each and every one of you for tuning in for the Chart of the Day every day. This is our 200th Chart of the Day since we started this. I think it was at the end of July, maybe early August of 2009. So we've been doing this for almost for a year now. Really, it's set up to be more educational in nature. I know from feedback that we have folks out there who trade these stocks, but definitely keep in mind that from our perspective, this is very educational in nature. We want to try and teach different things within technical analysis that we follow and that we like and that we think helps in trading success, and we're happy to be able to provide that to you on a daily basis. Taking a look at the chart today, this is Tempur-Pedic International. This is about a $2.3 billion company. You can see that the stock was in a nice uptrend for many months, trading primarily above its 20-day exponential moving average, which is the green line here. Went through a couple of periods where it had a little bit of short-term weakness. Both of the main areas came off of gap ups and black candles. You can see a nice run up here, a black candle, that's a reversing candle, back down we go. Here we had a nice move up, gap up, black candle, back down we go. But after the short-term weakness, we actually saw TPX climbing again throughout the balance of the last several months up until early May. Here you can see in about the middle part of April, maybe a little bit past the middle part of April, we had what we refer to as an exhaustive gap with exhaustive volume. You see massive volume. This is the heaviest volume that we see here on this 8-month chart. But the exhaustive gap is a little bit different than the continuation gap, and you really don't know which one you're getting at the time of the gap. We had a prior trend in place. We gap up. This could have been a continuation gap. The main difference was on the exhaustive gap, you generally don't get much follow through. On the continuation gap, you do. Here you can see we went up. We actually went up one more day. Many times the exhaustive gap, that's it. You basically end the run on the move to the upside. But here we continued moving. We bounced back. Actually fell all the way back down through the gap support area, bounced back up one more time. Check out this false breakout here to the upside. Notice the MACD was much lower than where it was previously, so we were losing momentum even though the price action was breaking to a 52-week high. So that's always important to look at in terms of a possible top on a stock. But anyhow, from that point we went back down, tested the recent area of support, moved up again, put in a lower high, came down, put in a lower low, and now we have this downtrend channel in place. It looks to me like TPX is setting up for a pretty nice short. The 20-day EMA crossed below the 50-day SMA. This is a death cross. You can see during the entire 8-month period, the 20-day was above the 50-day until just recently, and this tells us that the stock's losing some momentum. So unless TPX can get back up and take out both of these moving averages, take out the downtrend line, and then take out the upper end of gap resistance at 32.5 and the lower end just a little bit below 32, until it can do all that, I consider the stock to now be in a downtrend. So with that, I think anything from the current price up to, say, the 50-day moving average makes sense to take a short position. If it breaks above this trend line, you get up through about 32.5, I'd be careful. Maybe cover the position, especially if the volume is pretty big on that move. But to the downside, I think we can ride all the way back down to test this lower line on the downtrend channel. The RSI was seeing support at 50 throughout the entire uptrend, but now you can see we're starting to break down below that. So there's a lot of things here on TPX that's starting to look a little bit more bearish, and as a result, we're looking at this one as a possible short candidate. I hope you've enjoyed our presentation today. Be sure to check out our Chart of the Day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the Chart of the Day emailed directly to you. Happy trading.